In today's video, we're going to talk about state and federal payroll taxes for employers, including FICA, unemployment, local taxes, paid leave, and so much more. Hi everyone, I'm Heather Landau, payroll specialist and staff writer for Fit Small Business. Let's get started. Before we talk about state taxes, it's important to understand what your federal tax responsibility is as an employer. There are three categories of employment taxes at the federal level. The first is income tax, which is pretty simple. The rate that you will owe for income tax as an employer is based on the withholdings chosen on your employee's W-4 forms. Next is FUTA, also known as federal unemployment tax. This 6% federal tax on the first $7,000 of an employee's earnings is to cover unemployment. In most cases, as an employer, you'll be credited back 5.4% of this amount for paying your state unemployment taxes on time, resulting in a net tax of 0.6%. Last is FICA. This 15.3% federal tax is made up of two different parts, 12.4% to cover Social Security and 2.9% to cover Medicare. Both Social Security and Medicare are split evenly between employers and employees, each owing 7.65% total. It's important to note that if you're self-employed, you will have to pay the entire 15.3% yourself. Next, let's talk about state payroll taxes. In this section, we're going to cover the most common state taxes that employers need to be aware of, starting with state income tax. Most states in the U.S. do have income tax. They tax a portion of an employee's income based on withholding tables that they set themselves. Arizona, for example, withholds between 0.08 and 1.5%, depending on the number of deductions that an employee is eligible for. As of 2022, there are 9 states within the U.S. that do not impose an income tax. These states include Alaska, Florida, Nevada, New Hampshire, South Dakota, Tennessee, Texas, Washington, and Wyoming. In states with large urban areas, you'll often find local taxes added to your employment tax requirement. For example, San Francisco, Denver, and Newark require employees to pay local income taxes. Other states like Kentucky, Ohio, and Pennsylvania collect local income taxes for many of their cities as well. In addition to state and local taxes, there are also supplemental taxes. Some states tax supplemental wages, like bonuses, commissions, overtime, and severance pay, for example. Less than half of U.S. states have no supplemental tax, while the rest range from 1.84 to 11%, except for Vermont, which charges 30%. Next is workers' compensation. Workers' compensation is purchased as private insurance by business owners in most states. However, some states like New Mexico, Oregon, and Washington require it to be paid as a tax. Next is disability. Disability insurance differs from workers' compensation, which covers on-the-job injuries only, by covering all injuries and health issues that affect an employer's ability to work. Some states like California, Hawaii, and New York ensure that workers in their state have disability insurance coverage. Therefore, that additional insurance is added as a tax in those states. It ranges from 0.26% in New Jersey to 1.30% in Rhode Island. And finally, paid leave. Some states have began to mandate employer-provided sick leave or paid sick time off, which means it operates like a tax. New York, for example, deducts 0.27% of the employee's wages each pay period to cover paid leave for employees in that state. Now that we've covered what state and federal payroll taxes are important to be aware of as an employer, let's briefly discuss how to pay federal and state payroll taxes. Quarterly FUTA taxes are due if you owe more than $500 of tax each quarter. The due dates for these quarterly payments are April 30th, July 31st, October 31st, and January 31st. Next, let's talk about due dates for federal employment tax, including FICA and federal income tax. These can either be monthly or semi-weekly. For a monthly deposit schedule, you'll need to deposit your employment payroll taxes by the 15th of the following month for which they're due. For semi-weekly deposit schedules, when a payday falls on a Wednesday, Thursday, or Friday, the taxes need to be deposited by the following Wednesday. When the payday falls on a Saturday, Sunday, Monday, or Tuesday, taxes need to be deposited by the following Friday. While each state will have their own regulations regarding missing or late payments, these are the IRS standards for missing or late federal employment tax payments. For 1 to 5 days late, there's a 2% penalty. For 6 to 15 days late, a 5% penalty. For 16 or more days late, but 10 days from the first IRS notice, a 10% penalty. Amounts that should have been deposited but instead were paid directly to the IRS or paid with your tax return, a 10% penalty. And amounts still unpaid more than 10 days after the date of your first IRS notice or the day you receive notice and demand for immediate payment, a 15% penalty. In addition to making accurate and timely payments, you'll also need to make sure that you're filing the appropriate forms, including federal forms 941, 944, and 940. For more details on these forms, including downloadable versions and details on how to fill them out, check out our payroll forms article that's linked in the description box below. In addition to these federal forms, you'll also need to be sure that any state income, disability tax, municipal, or local tax forms that are applicable in your location are also filled out accurately and timely. Thanks for watching. Make sure to check out the Fit Small Business YouTube page for more small business content.